It was a solid day on Wall Street for the bulls as we saw the S&P 500 close higher by 0.85%. You'll recall in last night's video I mentioned that I was a little bit surprised to see the intermediate posture revert back to bullish on the market forecast indicator because yesterday the stock market was down. With today's follow through, we retain that bullishness, and perhaps there is something to this shorter term bottom that appears to be forming here. We did have some good news on the trade war front today. I mentioned last night regarding the Hawaii Technologies ban from the U.S. technology perspective. Today, the Trump administration came out and gave a 90-day reprieve so that everybody could kind of get their house in order and take a deep breath. And it seemed like technology stocks did respond positively as a result. However, it wasn't all good news. We did see existing home sales fall here today in economic news. And we also saw from an earnings perspective some retailers falling flat with JW Nordstrom's after the bell tonight down about 9%. And then during today's regular session, we saw Kohl's fall over 10%. So we're going to kind of take a look at all of that and see where it stands with all the other charts that we review. And then we're going to look at our trade application example from the financial space here tonight. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 21st, 2019. First of all, if you're new, welcome aboard. Go to our YouTube channel, click subscribe. While you're over there, go to our description area and sign up for our email distribution list if you haven't done so already. We're also heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee. And then lastly, we have a presence on Facebook. Check out our web address embedded in the logo there in front of you. All right, let's go ahead and dive into the action. As you can see, I've got chart 4B pulled up here in front of us. So for those of you that are premium subscribers to Market Scholars, you can follow along with your own charting package. Remember that this particular 4 grid here is going to review the S&P 500, which was up 0.85% today, the Dow Jones, which was up 0.77% today, and the NASDAQ Composite, which was up just over 1% today. So that's what I mentioned before about those tech companies. NASDAQ was up 1.08% today. And then last but not least, leading the charge here today was the small cap index. The Russell 2000 was up 1.33%. You'll notice that that candle looks pretty enticing there. That was a very wide or tall candle, I guess you would say, and it started at the low and it ended at the high, just the way that you want to see it if you're bullish. Whereas we did have a little bit of give back at the end of the session from the other indexes' perspectives. But generally speaking, as I mentioned in the intro, it was a nice follow-through day here after going to a bullish posture yesterday. The fear was that we would have a little bit of whipsaw and we'd whip right back to a bearish posture today. So the good news is with the upward move in the stock market, it kind of supported that bullish thesis, and we'll see where this takes us. As I mentioned in last night's video, one of the downsides of this, we got to be careful because we do have moving averages all painted red right now. So notice that those moving averages are red because price is below a falling moving average. And so if this is going to indeed be a shorter term bottom, we'd like to see price get up and through that moving average and then start establishing kind of a new zone of support above that moving average. And if that is done for enough period of time, of course those moving averages will start heading higher as well. But anyway, positive price action there. You'll notice that the Russell 2000 actually has a nice little double bottom that kind of formed here over the last couple of weeks as well. So it was good to see that this really nasty candle back here on May 13th kind of was held in check by yesterday's low, and then we're bouncing up and away from that right now. And again, remember that that background color of the chart being that light green color now does signify that bullish posture for us, because those green lines on the market forecast, which we refer to as the intermediate posture, those green lines are now trending higher again. So some promising price action there when it's all said and done out of the indices the last couple of days. Let's go ahead and take a look at our next chart setup now, and this will be our 3 green arrows chart setup. For those of you that are following along with me at home, this is chart 4C. And as we look at this, we do still have one chart with 3 red arrows. It's the same one that I mentioned in last night's video. It's the Russell 2000. A little bit surprised by that because I kind of figured with today's big move in the Russell 2000, 1.33% to the upside, that perhaps it would have been enough to get that stochastics up there and above that lower reversal zone to print that physical green arrow, but we're just not quite there yet. I would imagine we're probably only a day or two away if we can retain some of this bullishness that we saw today. But a good sign on some of the other charts. I mentioned in last night's video that we had the stochastics with green arrows across the board. So of course that continued to be true today. But one other piece of information that is brand new information as of tonight's close is the Dow Jones now has a green arrow on the MACD histogram. So that is a sign that momentum is starting to come into the Dow Jones Industrial Average. And we did see some promising developments there in the Dow today with stocks like Boeing rising, and I think Intel was up nicely, and maybe Caterpillar and some of those names that have been beaten up a little bit here recently. So maybe some love coming into those mega cap, more international types of names. Let's go ahead and take a look at our next chart setup now. This will be chart 4D. This is our 1040 crossover method. Now, when I'm referring to the 10 and 40, I'm referring to weekly moving averages. And so when we're looking at this particular chart setup, which is chart 4D, for those of you that are following along at home, each one of these charts is 3 years in length. Each one of the candles is 1 week in length. And so we're trying to get a longer term feel here. We're not just looking at what has happened in the last 3 months like we did with our other charts. And so here you can see that largely the path of least resistance continues to be to the upside for most of these indices over the longer term. The one kind of hiccup that we have on the charts is down below here with the Russell 2000. That's the one that continues to struggle on a relative basis. You'll notice that the high on the Russell 2000 was hit back here in August of last year. Notice where we're trading right now. We're still well below those highs in last August. Whereas when we look at the high label here for the NASDAQ Composite and the high label here for the S&P 500, you can see those highs were hit just within the last month or so. The Dow Jones is kind of somewhere in the middle, where you'll notice here the last high was back in, looks like early October. So anyway, from a longer term perspective, it does appear that the S&P 500 and the NASDAQ Composite are the ones that are kind of a little bit more of the leadership areas. The Russell 2000 not only is concerning from the fact that we're still so far away from the old highs, but it's also the one that is at the greatest risk of potentially giving us a death cross on the moving averages themselves. Remember, the blue line on the moving average is the 40-week moving average. The orange line on the chart here is the 10-week moving average. And so when those two cross each other, the background colors of the charts will switch from pink to green to pink to green. And as it stands right now with this MACD 2 lines that you see down here, we're getting awfully close to that 0 line there in the pink. And once that occurs, it basically means these two moving averages are crossing over at that time. And so you can see how close we are on the Russell 2000 to a death cross, whereas we're not really close at all on the Dow, on the S&P 500, or on the NASDAQ. So we'll keep our eye on that story and let you know as soon as we see that crossover take place in future videos. Let's now take a look at our intermarket analysis 12 grid. And this 12 grid, as a reminder, is going to look at things that are not necessarily directly associated with the stock market itself. It's going to look at different things like bonds and commodities, etc. And as a reminder, when we're looking at these 12 grids, including this chart 4E here, the background colors of the chart will tell you whether we have a bullish or a bearish posture on that using the market forecast technical indicator from an intermediate term perspective. So as you can see, we've got 3 pink charts on the board. So bearish postures exist for the VIX, which was actually down pretty significantly today. I guess I hadn't even realized that until just looking at it now. I didn't assume we would be down over 8% on the VIX with the markets up less than 1%, but it was a pretty sizable move there for the VIX. You'll notice after rocketing higher here about 2 weeks ago, the VIX has now almost given back all of those gains as it is wont to do. Remember, that is typical behavior out of the VIX, at least it has been for the last several years, where you have these big spikes of fear that come out of nowhere, and then all of a sudden that fear disappears within a few weeks. You will see here that the 10-year U.S. Treasury yield still has a bearish posture. However, note the last 3 days we've actually seen some decent upside price action there, and that very well might enter into our conversation when I talk about our trade application example a little bit later today. Notice down below here, gold was down again today. It was down 0.22%. An ounce of gold will now cost you about $1,274. But notice that we're almost at 3-month lows at this point in the gold futures contract. So that is one place that just simply has not been working for quite some time. Part of the reason behind that is what's going on in the chart on the left. Remember, this is the US dollar. We've been looking at that quite a bit in recent weeks and months, as that has been one of the better looking trending charts on the entire board. You'll notice that UUP had a very significant day here today. We were up 0.15%, which is actually a pretty big day for a currency. But more importantly, we were able to get up and through this prior resistance. You'll recall in last night's video, I mentioned how this was a disappointing day yesterday because it kind of fell flat on an opportunity to blast through this prior high here. Today, it kind of made up for that. We finished well above those prior highs set back on April 25th. So the uptrend resumes for the US dollar. Those of you that have been playing that bullishly for the last several months have felt the good vibes from that particular set of higher highs and higher lows. Let's go ahead and take a look at our next chart setup, and this will be our foreign stock markets. This is chart 4F. And as this gets loaded up, we still have the same 4 bearish foreign stock markets as we did yesterday. You'll recall that it was the 4 corners, and it still is. We've got Brazil, we've got China, we've got South Africa, and we've got Germany, all with bearish postures. However, I noted yesterday that it was impressive that Brazil had a nice bounce after receiving this oversold cluster signal. Remember, the oversold cluster signal is where we have all of our 3 market forecast lines in the lower reversal zone on the same day. In fact, if I right-click on this chart and go to maximize sell, you'll see exactly what I mean down below here, where we've got the blue line, the red line, and the green line all below 20 on the same day. So that kind of plots that nice little green dot down below, and it also has a green dot with the corresponding candlestick on the chart itself to signify, hey, we've got an oversold cluster signal there, and that signifies that things have gotten a little bit out of control to the downside, a little bit too far, too fast, and we might have a little bit of a reversion to the mean type of a move. Now, this was the initial candle yesterday out of that I was impressed with. Well, I'm even more impressed now because, as you can see here with Brazil, this was an enormous candle, one of the biggest on the board, probably only second to maybe this candle over here on March 28th. At least for the upside candles. And so that was a gorgeous looking move there. Those of you that were brave enough to play that reversion to the mean kind of contrarian viewpoint there on Brazil, you just got paid off in a big way because you don't often find entire country indices up 4%, but that's exactly what we found here with EWZ today. With China, I mentioned that yesterday it gave us the cluster. So notice the difference. Brazil, it was 2 sessions ago. China, it was just yesterday. So again, if I right-click on that, go to maximize sell, notice down below here, another thing that was kind of interesting about that setup is that we were at a bit of a double bottom right there. It kind of, had a low point that was very similar to this low point here on March, or actually it was May 13th. And so with that being an oversold cluster signal, again, blue, red, green, all in the lower reversal zone, not entirely surprised to see a nice little spurt higher here today. China was up over 1%. In terms of South Africa, things didn't work out quite as well as we saw with China. If I were to right-click on South Africa, go to maximize sell, notice that yesterday we did receive an oversold cluster signal on South Africa as well, but unlike China, this one was not able to get that reversion to the mean kick-started quite yet. Now keep in mind that South Africa does have a lot more exposure to gold mining than most other countries out there. I mentioned a moment ago gold has really been stuck in a downtrend, so perhaps that is where some of the struggle lies. Of course, that's not going to be the only reason, but perhaps one of the reasons. Well, we did fall again today. We were down only 0.17% today, but in doing so, notice that we put in our second consecutive oversold cluster signal there, and notice the long lower shadow there on EZA, which is the ETF that you can trade for the South African stock market. And so perhaps with that long lower shadow, that is a heads up that the bulls were willing to kind of step into this trade by the end of the day and push the share price up a little bit higher and well off of the lows of the sessions where the bears probably would have wanted it to end. So, we'll just have to keep our eye on that. Long lower shadow combined with 2 consecutive oversold cluster signals. Maybe for those of you that are bold enough, there's a reversion to the mean type of a trade there waiting for you on EZA. And so those are some of your charts that have the bearish postures, yet the posture was so bearish that we might be due for a reversion to the mean type of a bounce. Some of the other charts that are green on the board there that are starting to shape up a bit better. I mentioned yesterday that big move out of India. Well, we did fall a little bit in India here today. We were down 0.46% with EPI, but notice that we kind of stopped right there on that 30-day moving average. It tried to push below it at one point during the day, but like EZA, we did have a long lower shadow there on India as well, and we closed basically sitting right atop that moving average. So after the big gap higher on India yesterday, it wouldn't be entirely surprising to see a little bit of a, take a breather, take a little bit of a rest there to kind of consolidate those gains a bit, but at least that's a good starting point, a launch point for future bullishness there. We also saw a really impressive move out of Australia here in the last couple of days. Notice that EWA, which is right here in the middle of the board, was just pushing probably 2.5-month lows just a week ago, and then 1 week later, here we are finding ourselves at 3-month highs. So keep your eye on EWA. Australia is starting to shape up as one of the nicer looking trends out there as well. All right, moving right along here now to our U.S. sectors 12 grid. And this is chart 4G for those of you that are following along at home. Note that we had improvement day over day. That's why we look at these charts as often as we do, because, of course, prices change every single day, and therefore our postures can change as a result. And so as it stands right now, we actually only have one sector that remains on the chart that is pink here, and that's materials. And that's the only one where we have a bearish posture. Now note, in the label itself here, it says that the intermediate line is at 19.84 and rising. Remember that the way that the market forecast posture setting mechanism works is if it's below 20, which is the lower reversal zone, it's automatically a bearish posture no matter what. As soon as it rises above 20, it will revert back to a weekly bullish posture. And so I'm pointing that out because 19.84 is awfully close to 20.00. So as soon as tomorrow, we might very well see the materials revert back to a bullish posture as well. And at that point, we would have a clean sweep across the board, bullish postures here in the United States. A couple of things to point out here. First of all, staples were the only sector that was down today. Remember that staples chart looks awfully nice, but we have pulled back for the last 3 days or so. I remember oftentimes when the stock market becomes a little bit more bullish, money tries to flow towards the more cyclical areas of the market, and sometimes that means that money will flow out of the more defensive areas of the market, like your staples. So that was one thing to note. That was the only one that was down in today's session of these 11 different charts out there. The biggest mover was actually the materials that I mentioned before, which was up 1.54% today. But we also had the energy sector that was up over 1%. It was up 1.16%, so that was impressive. We also saw the industrials with a continuation move. Mentioned that one yesterday with our trade on Northrop Grumman. And so the industrials were up another 1.18% today. And part of that was as a result of Boeing having a nice bid higher here today. And then also the financials. Notice the financials were up over 1% today, up 1.04%. And one other thing that I noticed with the financials is this bottom that's been forming here over the last, let's call it week and a half or so, is reasonably impressive because the moving average never did roll over. Notice that the tip of the moving average is still yellow. Notice the tip of the moving average on the S&P 500 is red, so is the communications and other areas like technology and energy and industrials and discretionary and healthcare. All of those are red. So the vast majority of these charts have a moving average that's rolling over. The financials, is one of the rare ones that did not have that occur. The moving average continued to go up despite prices falling back in. So it was kind of in one of those leadership roles before the stock market really started tumbling, and therefore when it started tumbling with the stock market, it didn't come down dramatically below the moving average. So keep your eye on XLF and the associated financials that are out there. There's a number of them that are starting to look quite interesting. In particular, I would point out the insurance companies. You know, if you start rolling through insurance stocks, you're going to see some pretty interesting setups that are out there. Real quick here over on the internet, first of all, thank you to everybody that did click like for me here yesterday on my tweet for yesterday's Market Outlook video. 97 of you did, so thank you to all 97 of you. We almost got to that 100. At 100, I'm happy. At below 100, I do question things, so I always try to be upfront with you guys as far as where I'm standing in terms of my thoughts about this particular free product here on YouTube. So if you guys could make it a habit of clicking like if you get value out of these daily free videos, please go ahead and do that. And thank you again to the 97 of you that took the 5 seconds to do that here yesterday. Also, I did teach a dividend growth investing class today. Speaking of financials, that was the sector that we covered. So we talked about a couple of different banks, and then had some collective intelligence gathering and put it to a class vote to add another stock to our dividend account. So feel free to check out the recording of that if you are a premium member of Market Scholars. Tomorrow, David should be back in the pocket. Some of you guys might have seen his tweet here recently as he's been kind of in recovery mode. But anyway, as long as he's feeling up to it, he might have his options inventory class tomorrow. And then I'll do my Strategy Lab swing trading class. So lots of good stuff coming your way. Also, I wanted to point out, we talked about this blog yesterday in the video, the Dividend Growth Investing blog. And so if I click on this, remember you guys, even if you're not premium members of Market Scholars, you do have access to the Dividend Growth Investing posts here on our blog. And so I would encourage you to take a look at that if that is a topic that's of interest to you. Well, yesterday I kind of showed you how to scroll down and look at a couple of these columns and sort them by yield or by the number of years of increases or different things like that. One thing that I wanted to point out, because I didn't realize it at the time, but as I started going through my prep for tonight's video, I started recognizing a lot of the charts from the financial space that actually looked pretty solid. So, you know, if we were to look at a couple of these names that recently raised their dividend, Chubb, FactSet, Legg Mason, if we were just to pull up a couple of those on the chart, so let's just go back over here to chart 4A on the Thinkorswim Paper Money platform. If we were to look at Chubb, its ticker symbol CB, look at that chart. Looks beautiful. Now, the reason that it caught my eye was because of the dividend increase. But once you start looking at some of those dividend increases, you might also find some nice looking charts as a result as well. Another one of those names that was on the list was FactSet. FDS is the ticker symbol for that dividend raiser. Well, again, look at that chart. It's a thing of beauty. Not only are you getting a nice dividend increase, but you're also getting a fairly attractive trending security that's going up at a pretty rapid rate, or at least it has been over the last 3 months. And then Legg Mason was another one that was listed there. And Legg Mason, again, nice looking chart here. It was up 3.45% here today, breaking out to new multi-month highs there. So again, for those of you that get value out of the knowledge that you attain from looking at those stocks that are raising their dividends, don't forget to check their charts as well, because you might find that they're setting up for some interesting momentum trades as well, like Chubb and FactSet and Legg Mason are. All right, so sticking in that vein, let's go back on over here to the Thinkorswim platform and let's talk about our trade application example for the day. So I mentioned before that I was pretty impressed with the way that the financials have been shaping up. You know, the financials just went back to a bullish posture here today. So notice that this candle did close at a nice point. In other words, we closed basically at the highs of the day on XLF. And so that helps support the turnaround of this green line down here. Because remember, that's what really colors the background color of the chart, depending upon the posture. So when it's falling between 20 and 80, like it was here, that's why the background color of the chart is pink up here. But you can see that this just started curling higher a little bit here in just the last day because of this nice candle that we saw today. So we reverted back to a bullish posture on XLF, and therefore there might be a number of, you know, interesting looking charts that are out there. The one that I wanted to talk about specifically for our trade application example tonight is ticker symbol BEN. And this is Franklin Resources. For those of you that are familiar with mutual funds, you might recognize their key Franklin Templeton Investments logo that you kind of see here on the chart. So this is the publicly traded company behind the mutual fund series. And so you can see that Franklin Templeton, or in this case Franklin Resources, ticker symbol BEN, is also, like XLF, now having a bullish posture. Notice that the background color of the chart is now green as opposed to the pink that it was a week ago. And that again is telling us that this green line, after traveling coast to coast, from the upper reversal zone down here to the lower reversal zone, has now bounced out of that lower reversal zone and is starting to head higher to help support that posture that we're looking at right there. Now, if you are familiar with the Dividend Aristocrat list, it is a list of companies that are part of the S&P 500 and have raised their dividends for more than 25 years in a row or more. And Franklin Resources is actually one of those companies. There's not a whole lot of them out there. There's between 50 and 60 of them. So it's a pretty selective group of companies that have laid claim to a 25-year increase history within the S&P 500 itself. So this is one of those kind of elite dividend-raising companies. Now, one of the things that I'll point out about this is that it is a rare Dividend Aristocrat that I have not purchased along the way in this particular paper money account. You can see a number of the Dividend Aristocrats here in our holdings that we've done over the years, including stocks like Caterpillar and Automatic Data Processing and Chevron and Emerson and let's see, Johnson & Johnson, Coca-Cola, McDonald's, 3M, Pepsi, Procter & Gamble, AT&T, Walmart, and ExxonMobil. So that's quite a bit of them there, right? We probably had about 10 to 12 of those Dividend Aristocrats that we've placed in this account over time. You'll notice that BEN is not one of them. In fact, we don't have any ticker symbols that start with the letter B there in between ADP and Caterpillar. So that means that this is going to be a rare day where I buy a stock for the long term in this class. I'm not trading this. I'm just simply going to buy it for the long term. Now, again, part of the reason behind it and talking about it here is because it does have that bullish posture according to the market forecast, which is the main indicator we use in this presentation. We've already dabbled with this stock in my dividend growth investing classes where we don't necessarily use the market forecast indicator. So some of you are familiar with this one without a doubt, but for this particular audience here in the market outlook videos, it might very well be a newer name for some of you. Now, one of the things that I find fascinating about this one is if I were to come up here and go to my chart 3A, which is the chart that I tend to use for our dividend growth investing and trading rooms that I teach on Tuesdays, and I pull up that ticker symbol, and let's go to a 5-year weekly chart here. Notice that Franklin Resources has been largely downtrending for the last 5 years. And remember, as a dividend investor, that's not something that necessarily concerns you if you haven't purchased it yet. If you have purchased it already, then perhaps it's disappointing. But remember, you shouldn't have been purchasing it up here because it would have had a very low yield. These dividend stair-step lines that you see plotted on my chart here are helping us with those decisions. So this blue line in particular is important for this conversation. This blue line that you see here represents the area on the chart where this particular company would need to trade in order to have a 3% yield. When the price is below the blue line, like it is right now, it means that its yield is over 3%. When price is above the blue line, like it would have been way back here, then that means that its yield was way less than 3%. So for about the last half a year or so, we've found ourselves with more days than not with Franklin Resources having a 3% yield, and that is not normal. Notice that in the prior 5 years, there was very rare times where you could have made that claim. In fact, the first time that occurred probably would have been back here in September of 2018. So anyway, this one is starting to stabilize around these levels here, offers a nice attractive 3.08% yield, and belongs to that Dividend Aristocrat list that I mentioned before. Additionally, we tend to look at some fundamental metrics in my dividend growth investing class, and some of these metrics that you see on the spreadsheet are things that we would look at. This is a company that has about a $17 billion market cap, so it would be viewed as a large cap company. It's got 39 years in a row of dividend increases. It's got a dividend yield of over 3%. Its most recent dividend increase was 13%. Its 5-year annualized dividend increase is 18%, and its 10-year annualized dividend increase is 13%. Those are outstanding numbers in the world of dividend investing. Its earnings per share payout ratio is only 36%. In other words, they're not even paying out half of their corporate profits as dividends, so they've got a long ways to go and a big runway of future potential dividend growth as well. Their PE ratio is nice and cheap at only 12 times earnings. They barely have any debt whatsoever. They just have a tiny itty bitty little bit of debt there on the balance sheet. But otherwise, this is going to be one of the cleanest balance sheets you've ever seen. And then their beta is a little bit high there. So maybe that's a little bit of a black eye for some of you that like those companies with betas of less than 1. But otherwise, this is a company that has incredibly strong marks across the board for those of you that fancy yourself longer term investors. And so typically what I do when I buy these dividend aristocrats in this particular account is I put them in $10,000 increments. And so with this stock trading around $33 right now, we'll just buy 300 shares. So that'll be about a $10,000 investment we'll make in Franklin Resources. So I'm just going to come on over here to the trade tab, and we're going to click on the ask price here. This is after hours, so that ask price is really wide right now. So let's go ahead and change this to the closing price tonight of 33.73. And I'll go ahead and put this in as a limit GTC order in case it doesn't get filled first thing tomorrow. But I will change this from 100 shares over here to 300 shares, so that way we can spend about $10,000 on this. So confirm and send, review that one last time, and send that in. All right, well, thank you for joining me here yet again tonight. As far as I know, David should be back with you tomorrow, as long as his recovery is coming along nicely. But it's been good to spend a little bit more time with you guys here in the last several sessions, as we've seen a little bit of a rebound in the stock market here. So we're going to keep our eye on that. Of course, keep our eye on the China trade situation. But right now, we are starting to see a few more of those green shoots starting to pop up. So with that, I want to wish you all the best of success with your trades and your investments. If you got value out of tonight's video, go ahead and click like on Twitter. And we'll see you all next time. Take care. Bye-bye.